This is Let's Talk Business with your hosts, Marc Ebinger and Heather Boehme. Now, here's Marc.
Welcome to Let's Talk Business, the show that talks entrepreneurship with some of the best businesses in the San Antonio area. Coming up on the show today, we're going to talk about the importance of maintaining good credit for your business. We're also going to talk about taking steps to repair your credit, which is always an important thing to do, especially with the way the market is these days. Everything's tighter. A better credit score is going to help us go a lot farther. Joining us in studio today is Maria Prather with Clear Advantage Financial Solutions. Mia, welcome to the show.
Hi, welcome. Thanks.
In studio with us today is Heather Boehme, a certified business coach that works with business owners to gain clarity and achieve their goals. Heather, welcome back to the show.
Always glad to be here.
And I'm your host, Marc Ebinger, the owner of Crükus Marketing Agency, a company that specializes in giving small businesses a competitive edge by hiring low-cost virtual admin specialists and social media experts from outside the United States. Of course, this is how I built my entire company. We're at 28 employees now, which we actually kind of bounced up and down just a little bit, but we kind of leveled right there at 28. And I think we got one more that we're going to end up hiring towards the end of the week. So I love it. It's a lot of fun. Quick reminder for our listeners, you can catch video and podcast versions of the show anytime by visiting our website at satalkradio.com. And of course, if you're on YouTube, as you can see, from our website, there's a link there to our YouTube channel. We are over 10,500 YouTube subscribers.
We just hit 10,000 last week, too, so we jumped up to 10,500. I was impressed with us when I checked this morning.
Yeah, we're going by about 500 a week now, I think.
Wow.
And I'm looking to expand the show by one more episode a week, starting in October, just to kind of keep building on that. So if you're a business owner in the San Antonio area and would like to have your company featured on this show, visit our website at satalkradio.com or call our office at 210-879-8804. That's 210-879-8804, and we can get you booked on the show. All right, so to that point we're making earlier, since Mia's on the show, I was going to say Maria, right? But Mia's on the show.
Either way. It's
kind of a good time to get into the financial or credit help business. What kind of motivated you in that? I know we got some stuff to talk about, but I'm super curious. What motivated you to start a company in that in a credit repair business?
Pretty much it came back from the feedback that I got from not only clients, but other people in the industry that were saying it was harder for clients to buy a home. It was that they were pretty much not at the scores that they needed to be in order to get the better rates, since everything else was going up in price, whether it's rates or insurance, taxes. It was pretty much getting them out of being able to purchase. So we kind of listened to what they had to say and decided, why not start from the very beginning and help them build that score and educate them during that process in the financial world to understand what they need to do to be prepared by the time their scores do get to where it needs to be.
And that's the thing, right? I mean, they don't necessarily know how to fix or how to find out what's wrong and then fix what's wrong, and then the time and effort it takes to actually go through that whole process. But when it comes to business owners, I mean, credit is super important for us as well. So, business coach, Heather, what are some good reasons that we should be paying attention to our credit score?
So a lot of the time, short of buying a home, which I know a lot of business owners struggle with because they don't have that W-2 wage to show for it, but you'll run into it when you start thinking about getting a line of credit. A lot of the times when you're starting a business, you're hustling and operating on a cash basis. You pay for everything out of pocket. You pay for everything out of cash flow. But especially if you're in a business with government contracts or commercial, they operate on an accounts receivable basis. So they don't get paid immediately upon completion of the work. You get paid 30, 60, 90 days later. And that's where I see a lot of small to medium-sized businesses starting to think like, oh, rather than completely wiping out my cash reserves just to keep my employees paid, maybe I need that line of credit. And there's where, if your business hasn't been in around long enough, you're going to have to go based on personal credit. Isn't that right, Mia?
That's correct. Yeah, definitely. And like you said, especially with business owners, it's the quickest way to ruin your credit, unfortunately, because they are footing the bill for everything and trying to use all their personal lines of credit and maxing everything out to just keep themselves afloat sometimes. And it doesn't, they didn't ruin it overnight, so it does take some time, but those those people definitely can benefit. It doesn't matter what you do or where you come from. Everybody has an issue with their credit at one time or another.
So how do you start building as a business owner, right? I'm a small business owner. I'm fairly new, been in business for about 2 years. How do we start building that credit up?
Well, I mean, the biggest thing is talk to someone like myself or your financial advisor to see exactly where you are. And that way we can put a plan together and help you establish and reestablish your better credit score. So that way you don't have those issues and are able to continue to grow your business and still be able to, keep yourself afloat.
Should we be looking to get, even if we have the money to cover stuff, should we be looking to get a loan to cover those accounts receivable or something like that to start establishing credit when we can afford it ahead of time?
I mean, I think that's a person-to-person basis, and it depends on the trajectory of your business. There are types of business that may not need that line of credit, but if you're looking to expand into second locations and get bigger, sometimes leveraging debt can be a great possibility. I've had that conversation with a lot of people. There's a generation of Dave Ramsey people here that think debt is bad, and I see why. Because debt has burned people in the past, especially over the last 20 years. I mean, look back. I know my parents got burned with it. I grew up in a very do not take out debt in any way, shape, or form mentality. And to this day, I fight that because I'm just scared of it a little bit at my core. Mm-hmm. But imagine the difference between paying interest on 30 days worth of debt and wiping out $20,000 to pay the payroll. So you pay interest on $20,000 for 30 days until that account receivable comes in, or you pay the $20,000 and then, heaven forbid, something bad happens. So at the end of the day, is it going to behoove your business model to get a line of credit? Only you can decide that. But I think it starts at the personal level, because most of the time, if your business isn't 5-10 years old, it's going to be based off your personal credit score. And if you can get that lined up, then you can start to build up. It's just like our kids, right? They come in, they don't have a credit score. We can build it for them, or we can trust that when they're 18, they're going to make great choices to build their own credit. One way or another, you're going to have that following you.
I'm definitely of a mind where I think that building that credit up, even when you don't need it, it's a good idea. Mm-hmm. I mean, so like getting loans to cover those accounts receivable, even if I don't need them, is a way, at least in my mind, to start building that credit as an easy way.
Yeah, it definitely can be. The thing is again, education. If we don't know how to take care of our credit, how are we going to educate our children in order to do it properly? And it's breaking that cycle of learning what credit is and how it's not scary, how it can be used beneficially for yourself and your business and to grow. That was something growing up, didn't have that. My parents paid cash for everything. They didn't have lines of credit. It wasn't important. So, of course, coming out of high school, everybody's throwing credit cards at you for college. And, of course, you're like, sure, I'll take that. I don't have to pay it right away. Why not? Not knowing the interest rate that's on it, not knowing what's going to happen if you don't pay it and how that can affect you down the road. So, there are a lot of people, unfortunately, to this day that still don't understand credit or get secondhand knowledge from someone who got burned and still don't know the ins and outs of everything.
And Mia, I think what's interesting about your situation is you guys didn't start a credit company as a business like just because you wanted to build a business. This is something where you guys were operating in the mortgage space and you saw a need consistently. And so now this is your solution to fill it. So most of the people that you've been experiencing, I'm guessing, is when they go to apply for a mortgage and then it figured out that our credit isn't that great and we can't get the amount that we wanted. So the credit repair industry has existed prior to this. Where are you guys coming in that's different from everybody else out there?
Well, as you touched upon it, coming from the mortgage lending.
Mm-hmm.
We look at credit reports all day long when people apply, and we already try to guide them as much as we can in order to do it themselves if they can. But the problem is that again, with lack of education or not knowing or no one to be accountable to help them go through it, they won't do it. Not that they don't want to. They have every intention, but they don't know how. And when you don't know how to do something, the first thing is fear. And you don't want to ask. You don't want to let them know you don't know what you're doing. And that's completely understandable. But we come from that mindset. And so it's how do we make them understand we're not here to judge. We're here to help. And having that conversation with them. And that's why we want these conversations. So that way we can make people understand what can we do to help. We have the knowledge. We have the understanding. So let's help you from the very beginning to improve that credit because you deserve a home. You've worked hard. You work for your family. Who doesn't want that dream of home ownership? A part of this country. We say it to our military veterans. You suffer. You give your life for this country. You own a piece of this country by buying a home, buying real estate, investing in your family and yourself. So if we can help you from the very beginning to understand how to improve your scores to get the better rates, to get the better deals. If you don't want to buy a house right now, even to just get into an apartment, you have to have a good credit score. The market has changed so much. And to buy a car, cars are ridiculously expensive now. So if you want to get a decent rate, let's work on your credit and see what we can do to at least get those steps in order.
So when it comes to credit repair, what is it? What exactly is credit repair for?
The simplest
folks?
thing is just taking your scores and looking at all the derogatory and misleading information and things that are wrong and fixing it. Getting it, anything that is not supposed to be there off your report that can help your score. Things that are old and should have been removed, taken off your score. That's what repair is. It's restoring your credit to where it should be.
It's almost like there's a cleanup process that
Correct.
needs to
Yeah,
happen.
I thought of like having a nice deep house cleaning.
Right.
Just get it all squared away so you can at least keep it up.
What about somebody
definitely.
with good credit? I mean, it almost seems like somebody with good credit ought to at least have the conversation, get the education, and then get the direction or have the help in cleaning up their credit as well, because even those of us with good credit are still going to have some dangling participles somewhere, right?
That's true.
That could cause our credit to dip when it really shouldn't.
Oh, yeah. No, definitely. I mean, I have someone now who has their score in the upper 800s and loves their score in the upper 800s, but just natural, the scores change constantly depending on what inquiries come up, what may show up, any discrepancies. And when it does dip, they get paranoid. They get nervous because they don't want to lose that 800, that magical number, or so they think. And it just fluctuates. And that's the thing. That's where monitoring comes in. Everybody should have credit monitoring. So that way they see the fluctuations and see how it changes. A few points here and there aren't that bad. It's when it takes a big tank that you're like, okay, what's going on? What happened? Is there identity theft? Did somebody try to take my information? And that helps as well.
No, and you guys coming at it from the mortgage space originally, I know generally it goes, you check your credit score to get a mortgage. It's not high enough. So then you go out to a credit repair company and it's hard because I worked in the real estate space before, right? And that was always disappointing when a buyer really wanted to buy a home. They would go get their pre-approval paperwork filled out, and then whoop, the credit score wasn't high enough. So then we had to send them out to a credit repair company. I could never get a clear answer on timeline for them because at the end of the day, the credit repair person wasn't the mortgage person. They didn't have that connection. So I could ask them until I was blue in the face, and I got a lot of like, oh, it depends. We'll see. It depends on the person. So are you guys able to offer more of a, there's no guarantees, but a concrete timeline of if you start credit repair here, you should be qualified for the mortgage here?
Well, every situation is different, and it just depends on the person's situation. The same thing with a mortgage. I mean, every situation is different. So we can't say just because this person had the same score, they're going to get the same rate. They're going to get the same approval. Everything is in generalities. With credit repair, because the first round can take 30 to 45 days just to get an answer back from the bureaus, it's going to take at least a minimum of 2 months to at least see some action or change occur. And then from there, depending on the process and how many things that we have to review and look over, it shouldn't take more than 6 months, technically, because it may not get them the exact score they need at 6 months, but by then they should be in a pattern of knowing what to do and what to ask and what to look for, that they can now do it themselves. I don't want someone in credit repair for a year or years. There's no reason for it. It's just a way to get them started and get them understanding how to look at their credit and what the signs are in order for them to keep going. And so if we can help with that and educate them along the way, then that's what we're doing.
I love that approach because you're really in it to fix the issue. You're not there to keep them as a client.
No, not at all. I don't want them as a client. Honestly, I want them to do it themselves. It's hard. Credit repair is free. Anybody can do their own credit repair. It's the time that you are wasting. It's the time that you could be with your family, that you could be working, that you could be doing something better than writing letters all day to 3 credit bureaus trying to fix a mistake. It's like you could change your tire, you could change the oil in your car, but do you want to? No. I'd rather pay somebody to do it for me. And that's all we're doing, is helping do it for you so that you don't have to. But I want you to understand what you're doing.
Well, and there's a skill set that you guys have that's not necessarily us regular folks that don't know that world, right? So there's a huge advantage in the skill set.
I think there's value in just knowing who to call in almost any industry, because you see it time and time again when people get into business or they get into sales and they come upon an obstacle. And yes, I think everyone has the ability to figure it out, but that person who knows who to call to figure it out has an innate advantage over someone who then has to like go on Google and figure out and like research it and then trial and error it. So, I mean, yes, the time for sure, but just already knowing the process so that you can replicate that over and over again is a huge advantage, and it's going to pay off in the long run for people for sure.
So one of the questions that I've heard out in the world when it comes to credit repair is it a legal service? Is it legal to do that, for you guys to do it for folks? I guess, is that there?
Yeah, I mean, and I've heard that too, and it is a legal process. I mean, because we do have to abide by federal and state laws in order to do the service. We have to make sure that we are not doing anything that would hurt the client. Unfortunately, there are a lot of companies out there that have done so and have charged exorbitant amounts of money up front, and nothing was ever done, or they never got any contact or never heard anything, didn't know what was going on.
They're the reason for the sign in the bathroom.
Yes, exactly.
Yeah. There's always that one person.
So, and that's the one thing. We wanted to make sure that we are following all the guidelines that are out there. So that way it is, and everything that we have, we give to the client to let them know exactly what the rules, regulations are up front. So that way, if they do have any questions, they know where to go or who to put in that, complaint to if they feel that something is incorrect.
And I have kind of like a different topic question, because a lot of the people listening are business owners. So I think it's so great to see that you guys noticed a problem and you've created a business to solve that problem. But there's also a unique hang up here in that the mortgage industry is taking a little bit of a dip with increased interest rates. People are waiting for the crash, right? And we all kind of like nod our heads at that because whether or not it'll happen, time will tell. But are you looking to mostly service people looking for mortgages? Or are you expanding your net per se to look for other types of clientele to do credit repair?
The first thing we were looking at was mainly mortgages because that's the world that I'm in. But when it comes to credit repair, I can service anyone. Again, it doesn't matter whether you're looking to buy a house right now, but if you know or you need to have those services, I can help anybody, whether they want to open a line of credit, their first line of credit, or purchasing a car, or again, working on their business. Whatever it takes, that's what we're available for.
And have your activities when it comes to like generating leads for that shifted at all to accommodate those more? Because with the mortgage, you've established that pipeline. People are coming to you guys as like a source for mortgages, and then there's a need there. But knowing that, wow, this line of business can facilitate way more people, has your activity changed? The people you're talking to changed at all to
It
start
has.
capturing it?
Yeah, definitely. I have started talking to more businesses that look at credit. Anyone that looks at credit, whether you're hiring an employee or giving something of value. If you have to check someone's credit, then I would love to have a conversation with you because I want to make sure that, they're getting the best deal possible.
That's interesting because we talk to a lot of like the trades and stuff, and one of the big things that most of the people in the trades recommend is being able to accept financing. Your water heater goes kaplowy,
Right.
instead of dropping $3,000, can we put it on credit? And more trades companies are starting to accept that, but can their customers afford it is an interesting question.
That's very true. I mean, especially here in Texas with the hot summer weathers and people's ACs going out all of a sudden. If you can't pay $10,000 to $15,000 for a brand new air conditioning unit, and you have to finance it, and so you may not qualify for full financing. And then what are you going to do? You're not going to have an AC unit. I mean, you can't live like that, unfortunately. And you could, but.
Oh, goodness, would you want to?
Do you want to? Exactly.
So then does it become, hey, everybody, you need to at least get your credit looked at just in case the worst case scenario happens?
Correct.
So what does it cost for folks to have this service? Is it a fixed fee? Does it vary depending on the needs?
So for us, we actually have a flat fee. We're not the most expensive out there. I know there are some that are very expensive up front, again, which they shouldn't be. But we do a month-to-month service. It's, again, we ask that they do sign up for credit monitoring, and that's a third-party service, and that way we can take a look at their credit report every month, and it allows us to pull in their report to our system. That fee is, with tax, I think it's around $20 a month just for the monitoring. For our service itself, it is a startup of $99 and $119 per month. And there's no contract, no, you don't have to be with us so many months or anything of that nature. It's just month to month.
And what are they getting for that monthly service that you guys are doing? What are you actually doing?
So for me, that is me researching their credit report, writing the letters, and sending them out to all the credit bureaus and making sure each round occurs and what the updates are and making sure that we get that taken care of.
I'm curious, is there an average in there about how many letters would need to be written? I mean, are we talking like 3 or 4? Or are we talking 50 or 60? Just give me an idea.
It varies per trade line. I mean, you have to write a letter per trade line, and there's 3 trade lines.
Okay, so there's 3.
Yeah, the TransUnion, Equifax, and Experian. So you have to send a letter to each of them if it's reporting on each of them.
Okay.
Not all credit reports to all 3. So it just depends on who they're reporting to. So there has to be a letter for each of those. It starts off with looking at what the discrepancies are. Like on my own, I did my own, and I had some other name coming up as an alias. So I had to write a letter saying this name is incorrect, and it was on all 3 bureaus. The next letter is there was something on there that was outdated, that had been paid off years ago but was still sitting there.
Do you have to
lingering.
write a letter for every single thing that needs to be changed?
Correct.
Oh, wow.
Wow.
So if you have 30 items on there, that's going to be 30 letters that's sent to 3 bureaus.
Correct.
Is there any place else you're sending letters out to other than those 3 bureaus?
It starts with the bureaus, and if the bureaus come back with, depending on the answer they come back with, I may have to go directly to the main creditor themselves and write letters there. And then from there, those are the 2 that we normally deal with.
Now, you say main creditor. What do you mean by that?
So if you opened a line of credit with, say, Dillard's, and they're the ones that have sent you to collections, and that collection agency has been reporting, we can start with the collection agency if we don't get a response from the bureaus, or the bureaus are saying that it's valid, but we know it's not. So then we can go to the collection agency and start writing the letters to them. If they don't want to make any changes or decide they don't want to do it, we can go directly to Dillard's and ask them to remove it or adjust it as needed. So that's why it takes time, because each time we send a letter, it's 30 to 45 days for a response. And the response doesn't come to us, it comes back to the client.
So that's a follow-up mechanism that needs to be in place with your company, right? So you have to reach out to the client because they may not be calling you. You have to check back with them on a regular
Correct.
basis as well. So that's quite the follow-up schedule.
So, I mean, yeah, I think it comes down to communication, and
Big time.
does it really behoove the credit unions to get back to you quickly? Probably not. They're just kind of plodding along as is. This is maybe not your lane, so please feel free to tell me if it's not. But one of the, and again, I come from a line of Dave Ramsey people. So one of his things is save up as much money as you can if you've got bad debt, right? Collections debt. And they buy it from the department stores and whatever for pennies on the dollar.
Correct.
And then you make them an offer. So if you owe like 10 grand to Dillard's sells that debt to the debt collectors for like $1,000. You save up 4 or 5 and say, hey, debt collector, I'll give you 4 grand for this debt. And sometimes they take it, sometimes they don't. Is that something that you guys help a client work with, or is that on the client to figure out on their own?
No, that's all part of the service.
Really?
Correct. Because of the fact that,
Negotiating then.
yes, yeah, because we want to educate them on who to call. Because sometimes if you go directly back to Dillard's, you can cover that for that amount or less directly with them than the third-party creditor that bought it at pennies on the dollar, because they don't want to close it out for pennies on the dollar. They want the full amount. So it's better to go back to the original creditor if you can to make that adjustment, and that way they can write it on there that it's been paid in full. Because the third-party creditors don't want it paid in full.
Yeah.
They would prefer to leave it on there and let it linger and then sell it again to somebody else. So that's why when they say it can be on there for 7 years, yeah, ABC Credit Collection Agency has it for 7 years. Well, when they have to drop off, they'll sell it to 123 Collection Agency, and now they can put it on for another 7 years. So that's the things that we're trying to avoid.
So let's break that down just a little bit, because I think not everybody's going to know that.
Yeah, I feel like people think it'll just go away after 7 years.
Right. When you've got a credit problem, say with Dillard's or whatever it is, Kohl's, whatever, and you can't afford to pay that back, but they've pushed it off to a debt collection agency, right?
Right.
You can, if I'm just tell me where I'm wrong here, but I think I'm right. You can go to Dillard's or whatever that main person is and say, hey, look, I'm going to negotiate down, or have somebody negotiate on your behalf, negotiate down what you're willing to pay, and that requires them to then notify that debt collection place that they have to drop that, and then you confirm that they've dropped it because it's off of that credit, off the
Correct.
credit report. So all of that's correct.
Yes.
Okay, and then so now let's circle back around to, does that improve your credit score, or do you take a hit on your credit score because you had to go through that process and did not actually pay the full amount back?
No, you don't take a hit for it because it's showing that it was been that the account has been paid in full.
Okay.
It paid as agreed, actually, is what it was, because you didn't pay it in full. You paid it as you agreed with the actual debtor, which was Dillard's, Kohl's, whoever the case may be. So, but what happens is, yes, you got the letter saying that it's paid in full, and that's what you definitely want. But before you actually send that payment, you want them to be sure they're going to send you something showing that it's paid in full, because the collection agency may not believe it. Even though Dillard's has done their due diligence and sent them a notice saying, yes, they've paid it, it's closed. Oh, we never got that letter.
Oh, so they're going to play
It comes down to the
stupid.
official chain of communication again.
Correct. And so therefore, once the client receives that letter showing it's paid in full, we can use that and send it into the bureaus to show them it is now a paid and off collection. They can need to remove that from their report.
Do you guys also get the creditors off their back if it's been paid in full and the debt collector companies want to continue to try and press that issue? I would imagine
They
that
have
probably
to
has-
stop.
They have to stop. Is there
Correct.
legal grounds?
Yes, there
Oh.
are, again, through the chain of letters that we send, there are letters that will tell them they legally have to stop contacting this client because it has been taken care of, and that the client has every right to get a lawyer involved at that point.
I think that's a big deal. For me, this is like groundbreaking news that you can go in and negotiate your debt down. I'm thinking go to Dillard's, charge $20,000 worth of stuff, negotiate them down to 16, and you're good for the day.
Well, I mean, I think it happens quite a
You know
lot
there's
with
a
like
markup anyway.
it happens a lot with medical debt, I think, is that
Oh my gosh.
people, medical debt can't be reported for a certain amount of time, but eventually it can be sold. But like, you're not going to get, if you've got $100,000 worth of medical debt, they don't sell it to the debtors for that. So there's room for negotiation in there. Because imagine, you have $10,000 you're owed, you sell it to a debt company for $1,000. If you can make a couple extra thousand on that,
You'll do it.
I'll take it.
Yeah.
It probably has to go far enough, which is detrimental to your credit to get to that point. It's like a house sitting on the market, right?
Right.
When you first put it on the market, it's overpriced. It has to kind of marinate for a little bit before the seller's willing to come down on price, unless they have a real reason to want to get it sold. But once it's marinated for a while and they realize no one's going to buy it at that price, then they're willing to take a little
Negotiate.
money off, negotiate a little bit. But that's one of Dave Ramsey's core
How big of a
tenets, save it
stain
up.
is that going to be on the credit? I mean, it sounds to me like you could get it all the way back to where it needs to be if it's taken off. Hey, this is paid in full. But does the fact that you did have a problem, does that bruise, if you will, stay around and affect your credit score?
It will for a little while. It takes time for it to start coming back up, because that's not the only thing that they're looking at as far as your scoring. So there are different items or sections that they look at in order to calculate the scores. So by having that cleared off, that's going to help, but it's not going to shoot you up, 50 points overnight. It's going to slowly, gradually get better.
And
It's
how
great.
far back do the mortgage companies look on the credit? Is it just like the full horrible history, or do they look back a year, 2 years?
Well, we look at the last 2 years as the most important, depending on what happened during that 2 years. But we also look at inquiries. We look at bankruptcies. We look at other things. Were you ever late on a mortgage? Were you ever late on your rental property if they report to your credit? So it just depends on what we're looking at in order to look at the length of history.
Mm-hmm.
Well, I mean, that was a fast podcast session, right?
Really quick.
Really cool stuff, too. I'm looking forward to see what my team does with the clips on this. If folks want to get in touch with you, how do they do that, Mia?
Well, the easiest way is to just call me directly. They can reach out to me at 210-419-4016.
Thank you very much. I appreciate it. I learned a lot. All right, as you wrap up the show, quick reminder to check out our latest podcast. We have video version of the show anytime by visiting our website at satalkradio.com. Great job, everybody. That's going to be it for this one. We'll see you on the next one.